Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Monday, the 3rd of February. Starting off with 7 Digital, where you can see that stock has managed to spike up today after the double bounce the end of January at 0.33 pence. That was also, I suppose, old resistance in July around 0.31, 0.32. And at least while we're above that, looking for a retest of the resistance towards the top of the broadening triangle from April last year and the old resistance towards 0.8 pence. The other positive, I suppose, on the chart at the moment is the way that 50 and day moving average is both rising and looking to deliver a golden cross. As we know, the strongest point in the technical cycle is normally in the run-up to such crosses. Next stock is one that I don't think I've looked at recently, but it's up here today, and it's also a broadening triangle, rather strange one, rising one, let's say. The big move, I suppose, to the upside here was in November, with the break of a resistance line there around the, 3.25 pence, something like that. That was a break of a nice symmetrical triangle. Since then, we've had a sort of step higher, step by step up higher. So one in December and then one again in January. A gap through the 200-day moving average today at 5.37 pence, and the implication is that at least while we're above the 200-day line at that level, the target here could be up towards 9 pence plus, which we have to go back quite a long way on the chart. It was the resistance area in May for the shares, or April, May last year. So looks like a decent new leg for the stock at the moment. So also a relative plus point if you see a market gap up through a falling 200-day moving average. Next stock is one that I've been asked for on many occasions, but I've managed to resist it, given that I'm the digital communications officer at the company. But at least from a charting perspective, forgetting all the fundamentals, we've seen the stock break higher, broke higher at the beginning of the month, really, with the break of that falling wedge formation and the 50-day moving average then around the 1.5 pence level. Since then, we've stayed above the 50-day line, just knocking on the door of the 200-day moving average at 3.31 pence. So basically waiting for an end-of-day close above that 200-day line. We already hit it earlier in January. And a break of that level could take the shares up towards the top of the post-August broadening triangle that the shares have there at 7.5 pence. Stop loss on the bullish argument at the moment, back below the 50-day line at 1.96. The other point to note, I suppose, is the way that currently we have the 200-day line just rising now after a down period in December, and also the 50-day line rising. So we could, in theory, be in the run-up to a 200-day and 50-day moving average golden cross, which, as I've mentioned before, can be the strongest part in the technical cycle. On to another quite active situation, comes in the form of Eurasia mining. Haven't looked at this for a while, but interesting now. We've got this triangle there from, I suppose, October, November resistance line there running at around 3.8, and October uptrend line and the 50-day moving average, the support at 3.3 pence. Several bounces off the 50-day line at the end of January, which was and is encouraging, and really an end-of-day close above that November line should finally open up the door for a move towards the top of the October rising trend channel at 6 pence. Be interesting to see what kind of momentum the shares build up, given that they've been marooned between 3.3 and 3.7 for over a month. RSI helpful. We've had bounces off the neutral 50 level over the end of latter part of January, and with the RSI only at 60. Plenty of gas in the technical tank for the stock to head higher. Next stock, which was the easily the chart of the week last week in terms of the news flow as well, is Novacyt. Here you can see that we had the 40 pence target, which was the initial target when the shares were 16 pence. I think it was actually a Tuesday Bulletin Board Heroes, the first time I looked at the stock. We've actually hit the top of a rising December price channel, or just about hit the top of the December rising trend channel at 60 pence. Got to look back a long way to see how far the stock could head. There's the early October 2018 peak at 70 pence, which I suppose, while we're above 40 pence, is a best case scenario target. If you are a great fan of the stock, maybe you'd be encouraged by the way that it is possible to draw a resistance line there from the end of 2017, early 18, up to 100 pence, but that may be pushing things a bit too far in the near term. Basically, the stock in the near term ideally holds at 40 pence or thereabouts. Now a stock which looked as though it was gone in terms of the bull argument. The shares of Oracle Power fell back well below the 50-day moving average last week. I think the floor there was around 0.61. Interestingly enough, even though the shares had lost the 50-day line, that 50-day line kept on rising quite strongly. And so what we're looking for here now is an end-of-day close back above it, so 0.83 pence plus. And if we do that, then a partial or even total retest of the best levels of December could be seen. Line of resistance, which has been hit there at today's intraday high at 0.89 pence. If you're cautious on the stock, maybe you'd wait for that to break before assuming that 1.4 and 1.8 are on their way. Stop loss obviously back below 0.6 pence is about the nearest you can manage at this particular stage. Open Orphan, another stock in the news, which is worth taking a look at least from a technical perspective. It's become a bit of a coronavirus play now with the vaccine centre that it has. Situation here is that I suppose there's an uptrend line there from the end of December, rising trend channel heading towards 7.5 pence, and that's the target while we hold above the 50-day moving average at 5.85 pence. Just recapping a couple of stocks which I've looked at recently, which are doing rather well. First is Synergen, which broke that symmetrical triangle there at 8 pence last week and has made very good progress since. The message at the moment is that while we're above the 200-day moving average at 9.83 pence, we've got a top of July trend channel target as high as 20 pence. Finishing off with Scancell, which I think we've looked at for quite a while, but we are currently in the probable run-up to a 50-day, 200-day moving average golden cross. And if you add in the trend lines, i.e. the support line there from December running through the 50-day moving average at 6.15 pence, and then get us a rising parallel there at 15 pence, that could give us quite a decent upside from current levels. Obviously, the thing to do in the near term is for the shares to give us an end of day or end of week close above 8 pence, and that would open up then the 15 pence 2 to 3 month target. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.